Good morning. Good morning. Happy Monday, April 6th. And this is our pre-market analysis for QOL trading. And let's make a couple announcements before we get going. If you have not signed up for our website subscription, we just put out our third edition newsletter yesterday. So if you have time, go to QOLTrading.com and subscribe to the website there, and you will get our newsletter every Sunday, and you'll also get notifications for other things that we are in the process of creating coming soon. Hopefully by the end of April, we're making an application for a little trading app preparation for your day trading, journaling, testing your skills for trading, etc. So it should be pretty fun. So hopefully we're going to get that out before the end of the month. So go to QOLTrading.com and sign up so you can get notified there. Also, if you're new to the channel, subscribe to the channel so you can get future notifications for videos that we make. And then lastly, go down into the description area to join our Discord community, where we are currently doing live trading from 9:30 a.m. to 11 a.m. Eastern time. Okay, that's it for the announcement. So let's get into it right now. A lot of bank holidays happening overseas in Europe, and not here though. ISM manufacturing 9 o'clock. President Trump is speaking at 12 o'clock. I would anticipate there's probably going to be some more conflict tomorrow, but that's just my hunch. Everybody's aware that we had a couple of jets that were shot down, and fortunately, the pilots were rescued, so that is a positive thing. So let's get into some other economic news. I don't see much for tomorrow. Durable good orders. The orange folders, if you're new to watching the economic data, yellow folders don't really impact things. Red folders, you should be prepared that these economic data numbers could impact the market. So if you're in a position, be prepared there. Orange folders could do a little something. So what happens though, you should be prepared for too. If you have two orange folders make a red, right? So you have to be prepared for that as well. So that is for Tuesday. Wednesday, you have some FOMC speak at 1 o'clock. Thursday, PCE price index, final GDP quarter over quarter, and unemployment claims. And then Friday, we cap it off with core CPI month over month, and then year over year. Then at 9 o'clock to cap it off, you have University of Michigan sentiment. That's it for the economic data for the week. So let's get into, let's start out with what we're doing right now. And we're going into we're starting with the oils these days. So here's Brent crude right now. And you can see it's coming off a little bit. It's not at the peaks here at that 119 a gallon. So it is dropping below here, but we're still elevated above 106. I'm not really quite certain that once this conflict in Iran is over, that we're going to dip all the way back down to where we started down here right away. I think oil is going to stay elevated for quite a while. That's just my hunch. But right now you can see we're above the 20-day moving average here at 103. So it is stair stepping higher. You can see what happened from last Thursday and Friday, actually Wednesday and Thursday. What was this Thursday and Friday here? Yeah, that was Thursday. That was Thursday right there. So nothing happened over the weekend there, but you can see what's happening right now. I think tomorrow is going to be a big day. So, Trump gave an ultimatum by tomorrow. So we'll see what happens for today with Iran and what they're going to do. So this is Brent. Brent is the price per gallon, what's per barrel rather, what happens in Europe. And then now here is crude, which is here. And so crude is elevating pretty high. Getting pretty close to what Brent is. So that's pretty inflationary here for the United States. So you got to pay attention to that. Well above the 20-day moving average at 96. I think here domestically, you want to see the crude oil below $100 a barrel. So I think after this tension is done with the Strait of Hormuz, you're going to want to see oil drop down below $100. So I think that they had an OPEC meeting yesterday, 12 nations. And they talked about having, once the straits open, they're going to have they're going to increase oil capacity by maybe a couple 100,000 barrels a day, which is nothing great, but it's something. So it is still a little elevated right now, so you're gonna have to keep an eye on that. So let's go over to the VIX. Pay attention to the VIX. Interesting enough, with the VIX right now, the VIX is hovering right here at $25.34. It is exactly below where we started initially when this war started. If we go, we can fan out here. Actually, I could just go like this here. So if we scroll all the way back here, we get all the way back, find it. So this is when right here is when we first attacked Iran right here. So this is exactly where we're at right now. So the VIX is starting to calm down right now. However, the one thing to pay attention to on the VIX, we still have this open gap down, which we'll probably have to fill up here at $30.34. This gap up is filled from last week, from April 1st. So that is now filled. So now we have this little tiny gap down area that's going to probably have to fill before we start moving back normal to normal rounds here, where things are going to be kind of balanced here. We are below the 20-day moving average of $26.08. So you're going to watch that. If we get above that, you're probably going to start heading back into these levels here, this 26.97, and then probably pop through this Bitcoin glitch at 28.27 and then head into close this gap here from the 30th of March, and then probably get some resistance here, and then maybe head on back down. Hopefully, that's the ideal plan there. So let's get into the ES. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. So you see right now with the ES, still fighting this 20-day moving average. 20-day, when we open up today, the 20-day moving average is going to be sitting at 66.3967. And also, one thing I want to point out from last week, before the open, I had this nice fair value gap plotted out on all of the charts, and they all worked like a champ, except ironically enough for Tesla. But we'll get into that right now. So what is a fair value gap? A fair value gap is when you get a spike, a big spike move that breaks the structure, right? This is the break in structure, okay? And what I mean by that, so the structure of this move is down. And so now here is that structure line right here. And now this big move basically broke that structure. And so now where's the fair value gap? So the fair value gap, it breaks this structure. This dotted line is the structure. And so now the fair value gap is the previous candle before the purge, right here, the high, and then the low of the third candle. So it's a three candle gap here. So here's the first candle, here's the second candle where the purge is, and here's the third candle. And so your gap is the high of the first candle and the low of the third candle. That's your fair value gap. So before the open on Thursday, we spoke of this fair value gap that formed. And if you watch, it came down here like a champ. So right here, we were talking about this fair value gap. Boom. Came down here, filled it like a champ. And so now that fair value gap is still intact. Now you're going to say to yourself, well, why is this not a fair value gap? Well, I don't consider this a fair value gap yet, because we still did not break this structure right here, right? Because here is still a high. It's still respecting this high right now. So I'm not making this a fair value gap. It is technically a fair value gap, except it's missing this piece right here where it broke that structure, right? So that's it on the ES. So you're going to see on the ES today, you're going to have to get above this 66, I'm going to say here, the 66.39 and change, and then get over this point of control that we have at 66.53.55. You're probably going to get some headwind at that 66.80.36, which is the 200-day moving average. If you can get through that, you can move into that 67.04.14, and then potentially close this open point of control that we have from the 18th at 67.32.94. And that's also sitting at a high from September of 2025. Yeah, it's in confluence there. I'm actually going to get rid of that because it's kind of too much noise there. So I'll remove that. So that's a good enough level there. That 67.32.94. If you get through that, you have that 67.57.97, which is a September high, a weekly high that we had there. And then above you have that 50-day moving average sitting at 68.02.36. I think all of this will probably, if we can start plowing through that, I think it's all going to be news-based, right? I don't think it's just going to be a grind higher. I think it's going to be news-based. It's going to plow us through these levels. If we do lose this 65.88.77, I think we come back down here. That's this fair value gap again down here at 65.17.64. If you lose that, I think you come back down here. You do have this open point of control at 64.27. That's from the 27th. So you're going to have to watch that level also. You can see right here, though, this is a nice channel. So if you did lose this 64.27, I could see us trading in this channel between 64.27 and 64.22.53. So that's going to be it right there. You know, I mean, I guess you can pretty much mark down that. If you lose that, you have this 63.71.75 level, which is a decent support here, and that's from a September low of last year, and then below that you have 63.18.75. So take a snapshot of these levels here. These levels are pretty strong here. So now knowing that, let's just get over into the SPY. SPY is going to be kind of a mirror image here, just different numbers here. You can see we're respecting the 20-day moving average at 659 on the SPY up there. You can see this is a close from Thursday of last week, 655.81. You don't want to keep an eye on that close level right there. You can see right now it is respecting it. You have this high at 654.85, which is March 26th high. You know, break and retest, those are always decent levels, so you can watch that to make sure that it holds there. If you do lose that high, then you have a support level here from an October monthly low sitting at 652.84. So watch that level as well. I would like to see us push through finally and get through these moving averages. They've been knocking us down for the longest time. Just when we try to get up, you can see every time we try to get up, we just keep getting knocked down. So hopefully that wall is starting to get weakened and we can start pushing higher here. You do have this open point of control from the 18th of March at 666.78. That is open. You can see right here that it did not get filled here on the 23rd. So that is still an open level here. So if you did pop through the 20 and the 200-day moving average, 200 is 662.58. You come through that 666.78, you'll probably get a little resistance up there. You do have this fair value gap, same thing that we talked about on the ES, same thing. Here's your break and structure right here, plowed through it, three candle fair value gap. The high of the first candle, here's your breakthrough, and the low of the third candle, and here is your fair value gap. And as you can see, you know what happens with that fair value gap. Oops, excuse me. Boom. Did not hit it on. This is what we were talking about on Thursday morning, right? And boom, came right down here pre-market like a champ, shot right off it, right? I'm going to show it's going to be interesting. It's happening on all of the broader markets that I'm going to show you right now. So we'll just go right into it on the ES. Same thing, or on the NASDAQ. Same thing on the NASDAQ, right? Here is your break. Actually, here's your break and structure right here. Plopped through it. Here is your fair value gap. Boom, came down it like a champ, popped right up, and boom. Look at that. You could have made some real decent money off this fair value gap move here. We'll cover more of those fair value gaps later on. But right now, still respecting the 20-day moving average again today. When we open up, the 20-day moving average is going to be sitting at 24,356.91. You're going to need to get through that, of course, to get your moving higher. However, we still have this open point of control down below at 23,351.17. That's probably going to have to close up before you can start moving higher there. But if you do get that pop, again, it's going to be newsworthy. That's probably going to push us through. 24,437.26 is an open point of control we have from the 25th. And then above that, you have the 200-day moving average. That'll be sitting at 24,599.37. If we do lose this fair value gap, you have that point of control, 23,351.17. And again, if you lose that, you have some previous highs at 23,112. That's a weekly high from July of last year. And then again, you have some decent support down here at a weekly low from September of last year, sitting at 23,025.25. And that's going to pretty much be it for the NASDAQ numbers today. The Qs are going to be pretty similar. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video, and also go down in the description and join our Discord community. And don't forget to go to QOLTrading.com and subscribe to our website. Same thing. Fair value gap right here. Here's the break-in structure. Actually, that break-in structure was right here. And what I mean by break-in structure is down, 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 down. Boom, right here. Broke the structure for the downward cycle, right? And so now here's your fair value gap right here. Okay. Came on down right to the top of that fair value gap and then popped right back up. Okay. However, similar things. All right, this is not an open get rid of this one, remove that. So this is not an open point of control level here because it got closed. Just like this level right here, that's closed right in here also. So there are no open control levels down below, which is good on the NASDAQ. However, we have an open point of control up top. Excuse me, for the Qs. We have an open point of control at 600.92 on the upside here. Again, still struggling with this 20-day pre-market. You can see it's 589.43 is a level to get through. Then you have that 590.36, which is a monthly low, sitting from monthly low from October of 2025. So that's going to be a pretty big level right here. Pop through there. If you do get through there, you'll probably get some resistance here. It's a February of this year's low, 594.76. Then if you can get through there, then maybe we could tap out this open point of control at 692. And it's also sitting just below this 50-day moving average, 603.22. Downside, same thing. If we lose this fair value gap at 568.05, we come back down to this 559.54 level, which is a September of 2025's low. And then if you lose that level, you've got August of 2025's low sitting at 551.68. Below that, at July of 2025's low, 544.66. And then your support level below that would be 540.81, which is the February of 2025's high. So this is a major level if you did lose all this, all this move upward right now. So I'm liking all this gradual grind upward right now. So hopefully this is just a sign that we're getting close to an end with this war stuff, and we can get back to some normalcy. Okay, so let's get out of there. Let's get over to Tesla. So now pay attention to all these fair value gaps. They all worked out on all four of these charts. Now let's get into where it did not work out. Okay. So let's talk about Tesla, our baby Tesla. So now you have to pay attention to that. Ooh, let me get back to here. So Tesla, let's talk about Tesla. So fair value gap, same thing we were talking about on the fair value gap side. Okay, so this created your fair value gap. Here was your break-in structure. Okay, so now this created your fair value gap. Why do I have it red right now? Because we lost it. We lost it last week, and Thursday we're coming. I had this green. And then boom, it lost it, tried to get through it, and then it became resistance for us. So now we are sitting right in here, and right now pre-market is showing resistance. So I am going to keep this level here as a resistance level until we can get above it, right? So this goes to show you that there is nothing that is 100%. It worked out on 4 charts, and the one chart that we trade off of did not work on. So that's why you have to have your stops in place. Now, where would your stop be in this? Well, your stop would be Tesla. Let's say you were trading this and the market had opened up. See, the good thing about this, the good thing about this exact trade was that we already opened up below it. So I did not even take a long here because we already opened up below the fair value gap. So it wasn't even tempting to take a long off of this. Okay. So if it did open up right, let's say it opened up kind of inside the fair value gap, my stop would have been right below this level right here. Once we broke that level, once we pierced that level right there, I would have been out of that trade immediately because it would have shown me there was no support. So now what is it showing me? Look at what's happening right now. We broke this level and now we're coming back up and now it's showing me resistance. So I am not thinking long unless we can pop through and we can hold this 568.01 level, and then we can start moving higher today on Tesla. Okay, let's take a look at these point of controls. See what we have here. Open. Well, we still have this one open point of control that's open, 333.78. That's open from September 4th of last year. I'm not going to feel comfortable on the long-term longs until this thing gets filled for us. Okay. That being said, we have a lot of open point of controls that are open on the upside for us. We've got the close ones we have. We have one sitting here at 388.90. We've got one at 397.89. Above that, once you get through these 20, the 200, and 100-day moving averages, and of course the 50, you've got one sitting at 455.12, and that's from January of this year. And then the last one sitting at 478.39, and that's from December 6th of last year, and that's from where the all-time highs were. However, you can see Tesla right now still downside here right now. So this structure here is still intact on the downside. So unless some kind of big news comes out for Tesla to push it higher, you have to watch these levels right now. So I would say only thinking long on Tesla if you can break and hold above this 368.39. That would give me some confidence here of breaking this kind of structure right here. So you can see this down, 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 down. So it did break the structure right here. So this is why initially, you know, if I go back to my trading screen here, this is why down, 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 right? This then becomes your break in structure here where it broke. It broke that downward trend. So that's considered a break in structure. So this becomes a fair value gap. So ideally, the way this trade works is it comes back up, it's a break and retest, comes back down here, and then you take a long back here. Well, it did not support itself right here. I think they had some bad inventory numbers, and news will overcome any kind of technical analysis you have. So that's the one thing that you have to worry about. News will trump technicals, right? However, when in doubt, your technicals will save you. So that being said, the news is over now for Tesla. I think they have earnings coming out in a couple of weeks, so you're going to have to pay attention to that. So I would say longs for Tesla, you got to break and hold about 368.01. Then you can move back into this midline regressional trend line that I have here from the highs of last year. And that's sitting at 372.59. If you do get some good movement there, this becomes a nice speed zone here. And then you can move into this midline regressional trend line that I have here from middle of June of 2019, sitting at 379.08. And then of course, if you get above that, then you push into this level that we have up here at 381.52. Downside, if you lose, I'm going to say for today, lose this 363, 360.59 is a point of control that was open from not open, but it was a point of control at Thursday. So these point of controls could be support. You could use them as support as well. So that's a close from Thursday. So that could be a support level. Actually, one of my trades I use from that where it comes to that trade, and then I'll take a trade off of it. So if we do, when the market opens, pull back down here, I may potentially take a long off of it, but I'm going to see how intense, if the market is pushing down, how intense that's going to be, and if it does hold that or not. If we do lose that, you've got this 355.67. It's a weekly high from September of last year. Hopefully you get some decent support off of that. You could see it already used. It definitely bounced off of that level once. Hopefully you can do it again. If you do lose it, you've got that below that 348.98. It's a weekly high from August of last year. And then you have this regressional trend line, lower regressional trend line from the high of last year of December of 26 of last year. And then if you lose these levels, then maybe we can come and we can start targeting this 333.78. Not happy about that if you lose 30 points in Tesla right now, but it definitely does some nice housekeeping for us if it does close this point of control, and then we can start moving up right now. Okay, so that's going to be it for the levels on Tesla today. Again, you got to watch your levels. You know, keep it tight during these volatile times. So let's talk about what we're going to do as far as our options are concerned. I'm going to start out with today's expiration date, and you know, right now we're at 363. I'm going to have 365 calls for today. Close at 268 on the premium side. So probably open up right around here, maybe in the low threes. And then I'm going to have the 355. I may change this to 360 when the market opens. Considering we closed, where do we close? Yeah, so the close is right at 360. So I'm going to actually change this. So this is what I'm going to start out with. I'm going to start out with my 360 puts here. So you can see it closed at $4.40. We are a little elevated from the close from Friday, or Thursday rather. So this will probably open up in the threes as well. So both of these, this will probably open up in the low threes, and this will probably open up in the threes somewhere. So this will probably be a sweet spot. This is where I'm going to start today. I'm going to see how volatile this will be on the open. If it's too volatile, then I'll probably switch to Wednesday's expiration date so I can get some stability in the premiums there. So as far as what we're looking at on our 5-minute opening range, you can see this kind of stuff. This is wiki stuff here. It's very difficult to trade that with options when you get these big wiki moves, because what happens when you have the big wick like that, your premium price will fluctuate 30, 40 cents very quickly, okay? And if you're trading a one lot, okay, it only equates into like $30 really quick. But if you start increasing your size, and hypothetically, let's say you do a one lot and you're trading a 10 lot, 30 cents goes into $300 really quickly. So that's what you're gonna have to watch. But this is what I'm gonna start with today. So again, join the Discord channel. You can come for some live trading from 9:30 a.m. to Eastern time to 11 a.m. Eastern time. Also, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. If I don't see you in a Discord room, I will see everybody tomorrow morning for the pre-market analysis. Have a great trading day. Keep it light and watch your capital. Talk to you soon. Bye.